Hello and welcome to a Green Shoots FX presentation. Today we want to talk about best practices for importers. And one of the reasons why we want to show this is because certainly here in the US, we find that a majority of importers are buying from overseas and are paying for those imports in US dollars and not in the currency of the vendor. And in doing so, don't realize that actually foreign exchange risk exists, and also they're overpaying between 4 and 7%. And in most cases, when we have these conversations, CFOs and business owners and controllers will look at us like we're a little bit crazy to begin with, because they'll explain, as we can see and as we know, they're going to be paying for those goods in US dollars, and then they're going to be selling those goods for US dollars and therefore receiving dollars. So on the first slide, let's go through an example. So in setting the scene, as you can see in the bottom left there, this is the first month and you're looking to buy a pallet of widgets from Germany. You're being offered 30-day terms, and the current foreign exchange market rate for dollar euro is 1.14. So that's $1.14 for every euro. And that's the rate that's typically charged between banks. But your vendor's bank will add a hefty margin to the exchange rate, as banks typically do. They are, after all, for-profit organizations and well within their rights to do so. So the German vendor, having received the request from you for a price in US dollars, needs to figure out what that price is going to be, given that they want to receive 100,000 euros. So they'll ask their bank will provide them the rate, which is going to be overinflated because of the margin. And in this example, the bank is marked up to 1.1650. The vendor now knows they need to invoice at least 116,500. But given they're going to be paid in 30 days, they don't know what the foreign exchange rate will be at that time. And they don't want to take a chance that the market rate might increase to 1.16, for example, because at that stage, the bank will probably be offering 1.18. And therefore, in receiving $116,500 from you, when the rate is 1.18, they're looking at less than 100,000 euros, and they don't want that. And so what they do is they pad, which is an industry term for increasing the base dollar value by anything from 4 to 7%. And in our example here, we have taken 5%. And so the base amount of 116,500, which is already overinflated, gets inflated even more. And so you're quoted 122,500. And you won't know the mechanics behind how that price was created, but you as the buyer, you will understand that you can afford 122,500, and therefore you agree to the purchase. On the second month, you are asking again for a pallet of widgets. And again, the German vendor wishes to achieve a sale price of 100,000 euros. So again, you're asking for a price in US dollars. The vendor is going to the bank, but the rate this month on this day has moved from 1.14 last month to 1.16, meaning that the bank is now quoting 1.1850 to the German vendor. They will then have to mark that up, which they did last month, and now they're offering $125,000 to you for that same pallet of widgets. And this is where we highlight why you have foreign exchange risk. Yes, you are paying in US dollars. Yes, you are selling in dollars in the US. But because the foreign exchange rate has moved, your dollar value that you're quoted will also move. And so in between these 2 months, you have seen an increase of $2,500, and yet you're still paying in dollars. So you have a foreign exchange risk that you can't see, and therefore you can't manage. So on the next slide, our recommendation is that you, number one, request a price in euro. And in doing so, the vendor will quote you 100,000 euros, which is what they've always wanted. Rather than speaking to your bank and receiving a wide foreign exchange rate, you'll talk to us at Green Shoots FX, and we'll provide you with a forward rate for 30 days or whatever the term is that you've agreed with your vendor. But in our example, we're talking about 30 days. So we'll fix the rate 30 days forward. And if the rate today is in the market between banks is 1.14, it's likely that we'll be offering 1.1450. So it's $114,500 fixed to be paid on day 30 to your vendor's bank. And as you can see from the flow there, number 5, day 30, 114,500 is debited from your account and paid to the vendor. And in doing so, you would have saved $8,000 just on that first month alone, because we have removed the padding and you are using Green Shoots FX and therefore getting a bank beating foreign exchange rate. And then in month 2, the same thing applies, where you have fixed your rate from the first month, you have removed the foreign exchange risk, and also removed the padding. And so if you are aware of what your monthly purchases are going to be throughout the year, you can hedge each month today. And so in our example here, if on day 1 you would have hedged the next 2 months, you would have saved $8,000 in the first month and then $10,500 in the second month, because you would have been paying 1.14 in month 1, 1.1450 in month 1, and the same again pretty much in months 2, potentially months 3 and 4. And the rate just differs slightly the further you go out, but by and large, you would be paying something close to 1.1450 if the market rate is 1.14. And to summarize, changing the habit of a lifetime is actually not that difficult and is very much worth it. What we're trying to demonstrate here is that there's pretty much the same number of keystrokes. It's not as complicated as you think. And if you work with a dedicated partner and a provider of foreign exchange services, a specialist, if you will, then you know you're going to be in good hands. So to summarize, you are overpaying between 4 and 7%, and we've seen examples of actually 10%. And if you ask for a dual invoice, i.e., ask for a quote in US dollars as you do today, and then just take an extra 30 seconds and ask your vendor for an invoice or for a quote in their currency too, and then pay whichever is the cheaper, and you'll find that in most cases, the currency amount will be the cheapest. And if you're given terms, and even if that's 2, 3, 5 days, 7 days, a month, 6 months, fix that exchange rate today. Don't speculate on the market. You're not in the game of speculation. You're here to manage risk and protect your bottom line. So fix your rate today. And that means you now have a dollar figure for your cash flow forecasting. You've removed all of the currency risk that you previously had when you were paying in US dollars. And with luck, that'll also build a better relationship with your vendor because they no longer have the foreign exchange risk. You've removed that from them. You've taken that on, but then you've managed that down to zero using Green Shoots FX. So we'll leave you with our contact information. Please do drop us a line. Feel free to call us at any time, email us at any time, and just take 15 minutes out of your year to learn how you can save potentially tens of thousands of dollars and manage risk that you can't see.